its decision on the short-term lending rate or repo rate and kept it unchanged at 6.5%. Announcing the current fiscal year monetary policy, RBI Governor Shaktikant Das said that headline inflation has eased to 5.1% during January and February 2024 from the earlier peak of 5.7% in December 2023.
The Reserve Bank MPC decided by a majority of 5-1 to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is the SDF, rate remains at 6.25%, and the marginal standing facility, that is the MSF rate, remains at MSF rate and the bank rate, they remain at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns to the target while supporting growth.
RBI Governor noted that inflation has come down significantly, adding that robust growth prospects provide the policy space to remain focused on inflation and ensure its descent to the target of 4%.
CPI inflation for the current year 24-25 is projected at 4.5%, with Q1 at 4.9%, Q2 at 3.8%, Q3 at 4.6%, and Q4 at 4.5%. The risks are evenly balanced. Inflation has come down significantly but remains above the 4% target.
The Reserve Bank has retained real GDP growth forecast for 2024-25 financial year at 7%. RBI Governor Shaktikant Das said that the domestic economic activity is continuing to expand at an accelerated pace. Rural demand is gathering pace, improving employment conditions and sustained growth in manufacturing and services sector should boost private investment.
The real GDP growth for the current financial year 2024-25, which started on 1st April. The real GDP growth for 24-25 is projected at 7%, with Q1 at 7.1%, Q2 at 6.9%, and both Q3 and Q4 at 7% each.
At a press briefing in Mumbai, the RBI Governor made 5 observations about the MPC policy outcome. Thus noted that the inflation is moderating and GDP growth is robust, asserting that RBI will focus on preserving financial stability, promoting financial sector and payment system that is robust and future ready.
Inflation is moderating and the GDP growth is robust. Number 2, the Monetary Policy Committee remains focused on aligning inflation to the target on a durable basis. We derive satisfaction from the progress made under disinflation, but the task is not yet finished. Number 3, the financial sector continues to be stable. Number 4, external sector also continues to be resilient. Number 5, as we move towards RBI at 100, the Reserve Bank will continue to focus on preserving financial stability and promoting a financial sector and a payment system that is robust, resilient, and future ready.
All right, for more on this, I've been joined by our correspondent Shama from Mumbai, and also I've been joined by Mr. Prasenjit K. Basu, who's a Chief Economist, ICICI Securities. A very good afternoon to both of you. First, I would like to go across to Shama. Shama, tell us about the key highlights of the announcement made by the RBI Governor in the Monetary Policy 2024.
Well, Siddharth, for starters, you've already listed out the 5 important observations that were there in the announcement, and the governor usually takes that pattern to list out the 5 or the 7 important highlights of that particular announcement. So we understand that it was on expected lines. There has been no changes made in the key rates. The key repo rate at 6.5 remains for the 7th time, and that is why, as I said, that it is on expected lines. So we didn't see any event happening. The reactions or coming in. There was not much of a difference. Apart from that, we understand that inflation is a big headache for RBI, but it is moderating. However, the other inflation, the other areas of inflation is still moderating, but the food inflation, the CPI inflation still remains a headache for RBI, and that is why RBI is going to be watchful of that. They have already said that the task is not over yet. The task is to take the elephant out in the forest and ensure that it stays there on durable basis. So yes, inflation is going to be their target. We are understanding that the climate risks, the geopolitical risks, and also the supply side risks are some of the major challenges that are faced by not just India, but the external factors are faced by the international markets, global markets as well. So these were also highlighted. But yes, governor has said that since we are going to have monsoons, governor is hoping that there'll be a better monsoon and we will expect the inflation to go down further. So the 4% target of the Reserve Bank of India can be achieved, and it should be achieved. We are understanding that the forex reserves have also recorded a whopping around 646 billion US dollars. So that is another great thing. And also our governor has highlighted that it is RBI's prime duty to maintain these reserves, because it can be an umbrella, it can play a role of umbrella on any rainy day. So these were the major highlights, and yes, we are expecting that since this is the first bi-monthly policy of the financial year 24-25, we are going to expect more numbers in coming future, because as 7% GDP has already been estimated, and India is performing well, this could actually be achievable, and going further this can be also projected upwards. Back to you.
All right, Shama, stay with us. Now we also have Prasenjit K. Basu, who's Chief Economist, ICICI Securities. Sir, again a very warm welcome for joining in on the broadcast. The elephant has gone out for a walk. To begin with, sir, what's your overall assessment of the key announcements made by the central bank in its monetary policy, and how do you see its impact on the markets and overall economy?
Well, I think no real surprises with regard to interest rates. They've decided to stay on the sidelines for the 14th consecutive month. But I think the interesting aspects are, first of all, that the projected inflation rate for the second quarter of this fiscal year is 3.8%. And that, I think, is a positive development. If indeed inflation goes below 4%, then there'll be no reason for the RBI not to cut rates. So I do expect that there will be one rate cut as early as the June meeting, that is 2 months from now, and likely another one before the end of the calendar year.
Okay.
Otherwise, I think the RBI is being rather conservative on growth prospects. They are starting the year with a 7% forecast for real GDP growth. I think growth is going to be a lot faster. I think growth will be around 8.5% in FY25. And in FY24, my estimate is that it was at least 8.2%.
Okay.
So we are actually now comfortably the fastest growing economy in the world.
Indeed.
External balances are in fine shape. I expect that this year there'll be a current account surplus. Of course, there's a little bit of a risk with the heating up of the Israel-Iran situation. Iran has lost a couple of generals in a strike most likely by Israel on its embassy in Syria. The question, of course, is why are so as a result of that, we could have
Mr. Basu,
spike in oil prices.
We'll talk about it.
Which could hurt our current.
Indeed, we'll talk about it. But
otherwise, there's
I understand. I understand, sir. The RBI MPC estimated India's FY25 GDP growth at 7%. Do you agree that it speaks volumes about India's growing economy and the way India is progressing financially?
So yes, I mean, as I said, 7% is a very conservative estimate. I think growth would be a lot faster than that. And in fact, what is helping is the fact that inflation is now well under control. I think, if you look at the core inflation rate, which is directly affected by monetary policy, it is already at 3.3% in February. I think in March, it'll be closer to 3%. And in April, it'll probably be below 3%. So if core inflation is below 3%, then there really is not too much of an argument for postponing a rate cut. Also in the US, there's likely to be a rate cut perhaps as early as July.
Okay.
I think India's situation will allow an even earlier rate cut. So a rate cut will then spur even faster growth. What is helping is the fact that the external balances are in great shape. And India's exports have started recovering. In February, we had more than 11% growth in merchandise exports. The services trade surplus is large and growing. So we have a very positive environment. And I'd like to see a substantially faster growth pace, even than the 7% estimated.
All right. Stay with us, sir. We are still joined by our correspondent Shama Mishra, who's there in Mumbai. Shama, you talked about the consumer price index inflation. Let me just ask you, or retail inflation for that matter, for FY25, it's projected at 4.5%. Could you provide us with some details on this?
Yes, so we are, seeing all these data, not just for the financial year 24-25, but the governor usually tells about the quarters as well. So 4.5, then as our economist was also mentioning, it will also go down to 3.8 in one of the quarters. So we are understanding that overall the inflation is getting moderated. It is coming under control, but it's the only headline inflation. It's the only food inflation, which we usually call CPI inflation. It's not coming under control, and that is what is the problem over here. And the RBI, through its various measures, are trying to control that. Also, we have seen that before the 7th rate cut, whenever the last rate cut had happened, or the changes were made, we were understanding that to bring the inflation under control, the rates were continuously increased. So we understand over there that to make the spend less, to have people with less disposable income, all these measures were done. Now we are seeing the actual emphasis, or the actual work which has happened with the RBI measures. It's actually working, and now we are seeing that even the retail inflation is to an extent coming under the target, because the RBI's target range is 4%, given plus or minus 2%. But the governor has time and again said that even if it's up 2%, then it's not, usually to be calculated that we are okay with 6%. It has to be under 4%. Back to you.
Correct. All right. With this, thank you so much, Shama, for joining in. And also, Mr. Prasenjit K. Basu, I appreciate your time for joining in on the broadcast. All right. Still to come on DD India News Hour.